Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for March the 23rd, 2011. Now, we had a nice move there last night on the Australia Canadian pair, but it didn't quite pull back to the exact entry. Hopefully you guys, you're more aggressive traders, were seeing that move building and they jumped in on that trade at the 98.20, 98.30 area. We had a good move back up over the 99 area. Now, I think there's still some room for that one to move to the upside, but for tonight, our first trade we're going to be looking at is the dollar yen. Now, couple of things I'm seeing here. I know we've got volatility. We've got problems in Japan. The equities are a little touch and go right now. But the reality is the dollar yen is likely in the weeks and months ahead is going to move considerably higher, in my opinion, based on technicals, based on fundamentals, and the general condition of the yen currency is certainly uh, highly questionable right now. So getting to that, we're looking at our predicted true strength indicator from Vantage Point bottoming out in heavily oversold territory. We've got our predicted MACD turning off the bottom, moving higher. Our predicted medium-term difference is broken clean higher up to the 50, positive 50 area. Now, what I also want to point out here is that the yen is in essentially, from my standpoint, we have some very strong resistance in the 81.40 area. Just to point that out, I don't dispute that to begin, but looking at the crossovers from Vantage Point, the short-term crossover clearly to the upside. Now, the medium-term and the long-term crossovers are sitting somewhat flat, still pointing to the downside. But what I'm seeing here on the predicted high-low break is that for the last 2 days in a row, we broke above that. Now today we didn't break above the predicted high of Vantage Point, but we've certainly again we're certainly well within inside the range, and we're not getting anywhere near this predicted low. So this brings us to our daily report. How do we want to play this? Well, based on everything, we are going to have repatriation of flows back into the yen, but again, this is short-term stuff. We've got intervention. We've got an intervention watch from the major banks, a multilateral intervention, not a sole intervention by the Bank of Japan. So we've got 80.58, 81.17. Neural index is turned well into the positive again. We can see that the predicted the predicted medium and long-term differences are both rolling, or they're moving lower, which is again a positive sign for this. We've also had the neural index pointing up 3 days in a row without a substantial move. The dollar yen's been trading in a very tight range for the last couple of days. Now we can see it here. We've got our low at 80.85, our high at 80.29, then 80.69 the day before that, and 81.32. So it's a very tight range. Looking at the neural index, looking at that short-term crossover, everything here to me tells me that it's pointing higher. So we're going to use 80.60, 80.62 area for a buy position. We're going to have our stops below 79.60. Stay away from that breakout point at 79.70. And again, we're going to be looking for a move. The day traders, you're looking at 81.17 to 81.20 area. Medium term traders, by weekend, I would be focusing more around potentially the 82 area, 81.80, maybe even a little bit higher, depending on what happens with the equities, because the equities are going to be volatile and they could drag the dollar yen pair down. But we'll wait and see how this one plays out, because right now, again, my bias is clearly to the top side. Now that's our first position for tomorrow. And again, only your more aggressive traders should be going in and trading the dollar yen right now. But if you're going to trade the yen, I prefer the yen compared to the pound yen, the euro yen, the dollar yen. If you're trading the yen long or short, excuse me, then the dollar is where we want to be. So we're going in for a buy position, 81.60, 81.62, and again we're looking for that move back towards that 81.50 level. Now that's our first position for tonight. Now our second position will be in the grains, specifically the rough rice continuous contracts. Now, this one here, this rough rice contracts, this one looks like it's setting up for a real nice move here, guys. We've got everything lining up exactly what we want. We've got our predicted MACD crossing the trigger in oversold territory, our predicted true strength indicator from Vantage Point, again, crossing that trigger in oversold territory. Now what I'm going to do is, we've got some resistance up here. We've closed at 1385, but we've managed to clear all three levels of the Vantage Point predicted moving averages. Now, more importantly, looking at this setup, the way I see it with the medium, this is we're going to start with the medium term crossover. Now, when you have this combination on the Vantage Point software, the medium-term crossover, the predicted MACD, the predicted true strength indicator, this is a pretty solid trade, guys, for a long. So we're looking for a place to buy this thing on dips, and we're in the 1300 area now. We should be looking for a move back towards that 1600 mark in the days and weeks ahead. But looking at our long-term crossover from Vantage Point, we can see that we're just crossing over that now. So it's the trade's still a little shaky. Our triple EMA cross has not gone off, but again, these indicators are all looking good. Predicted short, medium, long-term differences, all turning positive. So with that said, let's go into our daily report. Let's see if we can fine-tune this entry point a bit. Now, there's a few things, as you know, that I like to watch. I watch those predicted moving averages as pivot points. Then I'm using my daily report from Vantage Point to see if I can match the exact entry of where to get into this trade. So we've closed at 1385, 1368.40 is the predicted low, 1402 is our upper end target for our exit point for day traders. Longer term traders, medium term traders, like I said though, you should be targeting higher towards that 1500 mark. Now 1368, that is an area now we've identified as the predicted low. So when we have a strong, potentially strong moving trend here, we're going to go in now and have a look at the Vantage Point predicted moving averages again. Now we can see here that 1372 is the 3-day predicted moving average, 1348 and 1362. So we're going to be using, as your more aggressive traders, they're going to look for 1372 as your entry point for tomorrow. Little less aggressive traders, they're going to follow down towards that predicted low around the 1368, 1369 area to get into your long. And then again, we're looking for a move higher. Now, I don't think we're going to see a big range tomorrow, but we're going to look for the momentum of this thing to continue. So buying on a dip, very good play in my opinion at this point. And again, I'm just using the continuous contract, so you'll make your adjustment to the month you're trading in. But again, we're buying on a dip. We're looking for a much bigger move on these rough ice contracts, excuse me. So those are the market positions for March the 23rd, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.